Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. What we're trying to do here, folks, is get you what you need to know before you go. And what we're going to do is start out with talking about the economic data, see how the geopolitical environment's impacting the markets, and then finally talk about some strategies we can implement into our portfolios based on those assumptions. All right. So before you go, please smash that like button. And there's a subscribe right next to it. The bell will give you an indication when I pop in on these videos unannounced, like this one. It's supposed to be announced or scheduled a little bit later, but I will show up at any time when I'm finding an opportunity to talk about something. All right, so let's get on with it. Economic data, it is a Monday, so pretty light, but we did get some factory orders out of Germany. Those actually came in a lot better than expected at 1.8%, expected to be 0.9. So seeing the factory orders there, we've been talking about factory demand for crude oil or some of the byproducts of oil. That's going to help drive these prices higher. Well, when we take a look at oil prices today, we'll see that they have blasted off, made another all-time high, trading up to 130 overnight. Seeing the pullback here now, only trading about $5 higher on the day. Something to note here, though, look at this candle. When we talk about topping candles, this is quintessential of what we would be looking for. Another reason, because it blasted off, we have a little bit of a gap here, and then this spinning top doji at the top of it. That is an indicator of a topping pattern. Of course, we need to see a confirmation with a nice big red candle tomorrow. If it were to finish like this, that would give us a rollover. That's what I'm hoping for. And as a matter of fact, I think there's a lot of economists even out there, or folks that are looking at what's going on in the environment right now and trying to determine what's going to happen to the economy going forward. Well, these higher prices, every time we get these high prices in oil, there's folks that are clamoring, hey, that's a great thing for the economy. It shows demand for this. Well, the fact of the matter is, folks, every time we've seen these kind of spikes in oil, it has caused a recession here in the United States and many times globally. So what we're going to be seeing here is this will slow down spending. And I've talked about this time and time again. Oil sucks velocity of money out of the system. And what I mean by that is velocity of money is created when you and I are spending money in different ways. That will then again be spent in another way. So the idea is when we're spending in our communities, about 80% of that goes back into the community. That community then spends that money. That creates that velocity, okay? When we're talking about with oil, it may not seem like that big of a deal, but when we're going from seeing folks pay less than $3 a gallon of gas to over $4.50 a gallon of gas, that extra $1.50 per gallon, folks, is not being spent in the economy elsewhere. So that slows the economy down. That's what creates that recession, or at least I wouldn't say that quote unquote is the nail in the coffin for creating a recession, but it does make it very difficult for us to stop those headwinds. All right. So we would like to see folks spending that extra $5, $10 a week in the economy rather than putting it into their tank, because that will then get us moving. Yes, it will help spur inflation a little bit, but we're not as concerned about inflation as we are a recession with high inflation. Those are two things. When those two come together, you have a recession and inflationary pressures. That's called stagflation. That is very difficult to get out of. So we want to see some of these inflationary pressures ebb a little bit here in the meantime. So crude oil, although it's been very strong and the risk has been to the upside, I would be very concerned about the upside at this point in crude oil. If you are long, you are right, and it would be something I would be an itchy trigger finger for this market to start wanting to cover this gap, lose a little bit of this momentum as the folks start to cover, because it just moved way too fast, way too soon. All right, bonds, I think they are over their upside. Testing that 160 was a little bit ridiculous. That was basically insinuating we weren't going to see any interest rates now, interest rate hikes really so much. We've already seen last week Powell talking about raising interest rates. Of course, he did come out and say that it wasn't going to be at the rate that some of the other folks were talking about. I told you, in these market commentaries that they were not going to be raising rates at the pace that some folks like Bullard was talking about. It was going to be more of an incremental 25 basis point. That's what Bullard, that is not what Bullard was saying. He was saying 50 basis points at a crap. Paulson came out and led us to believe it was going to be a little bit slower incremental increase. That being 25 basis points. That did give the bonds a little bit of room to the upside, but I think they are well overdone. Now, we talked about this in these videos, covered calls, high volatility right now around bonds. Now, you might not have necessarily bonds in your portfolio, probably over in your 401k. I still talk about how we look at this as an overall portfolio, and we use our trading platform to hedge some of our exposure to the markets in that 401k that you can't necessarily always trade around. So we'll show you how to do tricks like that around that. Now, gold blasting off, testing 2,000, right? We got into that mark. That is an historical high. Getting to that 2,000 was a major coup here. Will it be able to hold on to it? As of right now, it's not doing that. But again, folks, this is a flight to safety, and people are going to put money here as they see the overall markets pulling out. They will exacerbate that sell-off in the equities as they pull out of equities and throw it over here into something like gold futures as a retainer of value. Now, and it also is somebody who is an inflationary bug will go to gold for that hedge. I was expecting, folks, that we were going to actually see a lot more interest in Bitcoin throughout this. And the fact that it's selling off as hard as we're seeing, things like gold moving higher as folks are trying to put money into safe haven assets like gold bonds. That's where we're seeing those spikes as equities are coming off. It's really surprising to me in a day and age like this that we're seeing Bitcoin sell off during that kind of market turmoil, if you will. And now we're finding a bottom here in the markets. We did get that confirmation, but I'd say that this is an area that would be very interesting to get involved in Bitcoin, especially with what we're seeing going on in the markets. It could have an exacerbated move to the upside now that it's been lagging behind. So keep your eyes on this market. I would say Bitcoin risk is to the upside as well as all of the cryptocurrencies at this point. The way that gold's reacting, the way that the markets are kind of pulling back, I think that this is something that could have upward momentum. Now, having said that, it does seem like some of the limelight or the spotlight, if you will, is coming off of some of these cryptocurrencies, and that lack of top of mind awareness, if you will, in the markets, lack of focus on those markets is allowing it to start to sell off a little bit. Most people that buy Bitcoin never sell it. So some of these intraday moves, is it because the buying pressure of these folks has stopped, and the folks that have just held on are maybe getting a little bit of weak hands here? We'll have to keep our eyes on that. Dow Jones Industrial Average, again, we've extended ourselves outside of the value area, which is going to bring in new buyers here to cause a little bit of support. I think that's especially going to show up here in the Dow Jones Industrial Average, more so as we can see that NASDAQ has had more of a correction here in terms of percentage terms. But that said, again, everything's a little bit overdone here. We're getting some nice candles today where it looks like the bottoming patterns are starting to revert. Could see some buying pressure coming into today. Last week, there's nobody that really wanted to hold anything going into this weekend with all of the tensions going on in Ukraine and Russia and a nuclear power plant kind of being taken over. As a matter of fact, it's like 6 times the size of Chernobyl if it were to melt down. So that was a little bit of a wild card that folks really didn't want to be holding equities going into the weekend, but coming into today, I think that we could see some push. So risk to the upside, I would say, at least for the next couple of days here in equities. I don't think we're going to necessarily see newer lows in the next 2 or 3 days. I think that because we've had this sell-off, we're going to see some momentum shift here and some buyers come in. So not long-term risk to the upside, but I would say that it looks like we're a little bit overdone to the downside with this equity correction, and we're due for a bit of a bounce here, and the markets are setting up to look that way as well. When we get through all of this noise and look at all the charts, you can see that we really, over the last 2 weeks, have not really gone anywhere. And we talked about this in these videos. When we pulled back a little bit overextended to the downside, especially in the E-mini S&P, as I was talking about, the number 4,400 was the number we were probably going to get to and start to settle down. And that's really come into fruition here. It's panned out to be between 4,300 and 4,400. So we've got a 100-point swing there that the markets are wanting to stay in. There's going to be a real need to have a kick in the pants, folks, for us to get out of this little range that we've been in for the last couple of weeks, because right now the bulls and the bears are fighting it out, and there's no new information in order to get us to move one way or the other. So really, until these bulls and the bears see some type of information that changes their perspective right now, I really think that we're going to kind of settle down here. We might see some volatility, some big spikes just based on news driving events, but really the overarching theme here is going to be looking at the economy going forward. Is oil going to start slowing the economy enough to put us into a recession, which would give us a bit of a worry about some inflationary aspects with a slowing economy, which is not what we want to see right now. All right. So that's what we've got. I haven't really added anything going on right now, just keeping my eyes on the markets to determine directional moves. I'm not going to get myself all in this kind of noise where it's just choppy back and forth, a couple of 100 points up one day, a couple of 100 points down the other day. If you're into trading short term, we've got gamma trades we could talk about implementing in and around this type of markets. But as you guys all know, I'm a recovering day trader. So I'm going to stick to the options on a little bit long-term perspective. So in the meantime, don't forget to smash that like button, hit the subscribe. And if you comment, I will circle back around to make sure everybody's clear of concept. All right. If you can't, oh, that was weak. If you can't take that, take it easy. Bye for now.